Hey everybody, this is Jim at SP500chart.com. It's a little after 2 o'clock on February 9th, 2014, and we're going to take a look at the S&P in the weekly review and also see what happened on Friday. Before we take a look, I just need to remind you, as always, that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. Honest to goodness, I'm a guy just like you who is curious about stock charts and just have spent a lot of years looking at them. So really, I'm just a guy who draws lines on charts. So let's take a look at the S&P. Starting off with a 30-minute chart, you can see that the S&P finished the week very strongly. And we came into the week with this diamond pattern on our chart identified. And in last weekend's video, I remember I paused the video and I said, I'm going to go look something up, because I can't remember any chart or anything where I've read that a diamond pattern acts as a reversal, except for a top. In other words, I couldn't find a diamond pattern bottom. But I thought because we were so close to this turquoise line that there was a chance this could be one and we could break out and up over this pattern. Well, sadly, on Monday, I got that frankly dead wrong. And the markets were down big on Monday. The good news is, I didn't say, I guess you could say the good news was, I didn't say we're going to reverse here. I just said, be on the alert. This could either go up or down. They typically go down. They typically serve as either a continuation or a top. No example I found yet of one of these serving as a bottom. I'm sure there is one, but I just haven't found one. So we, thankfully, the way the market worked out on Monday, come to daddy, hello, there we go. Thankfully, when that broke down, it did not gap down. Well, we closed on that the previous Friday at about 1782. The low was 1740. So that was a 42-point drop in the S&P on Monday. And the good news is, if you were on a hair trigger looking to get out, we didn't gap down and then start running down. We just started running down, period. So this gave you ample opportunity to exit your position if you needed to. And we knew we had a target also from the height of this pattern, and that target measured out. I'm not going to go from this height, because this is kind of a I was going to say a synthetic high. And the reason I say that is because this is just where those lines meet. I would go rather with the highest point that actually traded in this pattern, which is just a little bit underneath that. So we end up with a pattern. Once this broke down, we knew to expect something in the mid to high 1740s as a minimum target. That was exceeded, but not by a lot. Then throughout the rest of Monday, Tuesday, and Wednesday, we formed a double bottom. And I think we pointed that out as well. And in addition to all of that, by the time we had this low put in on Monday, I snapped a parallel line from this top here saying, let's see if we bounce on that line. Lo and behold, we did. And now we came into Thursday with the possibility of this being a reversal, because we're also very close to a longer term support line right here, which just to remind you goes back to June of 2013 and also October of 2013. We were right on that line, so could expect a bounce. And by the way, this line is also kind of parallel to this, so now we may be in a rising channel. Okay, but let's go back to the 30-minute chart. I mentioned that I thought we would probably see some pretty good, let's do 10-minute, that we would see some resistance up and around the 1770 to 1775 region. But man, S&P ran up there, made its minimum target from the little double bottom, actually made that target the day it broke out at the close. That was right about where that target is, maybe shy by a fraction of a percent. But then Friday, my goodness, just zipping on up as if nothing's going to stop this market. Well, you know, something's going to stop the market at some point, but that really looked to be strong. The way we powered up through, even hitting some resistance, then selling back and doubling back up with more force to take out those areas of resistance that were in the 1784, 1785, in addition to those that were down in the 1770s. So now, going forward into the week starting February 10th, I think I'm prepared to say that this line should now be flipped to support, because this line is clearly taken out by a technically significant margin. Another sign of strength is that I hate it when I get interrupted mid-thought and I don't remember exactly what I was saying, but powered up through these areas here. And what's kind of interesting, if that seems to not flow properly, just forgive me. What's interesting now is we have come back to a level that is equal to the highest point in our diamond pattern. So I would watch that. I would say, coming into trading on the 6th, that let's see if we power up over that line. That would be wonderful. And then the next area that we would have to get over would be one of a couple of interpretations of this next area. We had two highs back here on the 9th. Actually, the 2nd, the 9th, and again on one day we hit a little bit of resistance the week of the 16th. So I'm thinking roughly 1808 would put up a fight. Then one more area, and that is where we had our dip down here on our double top. At this point, we are above the neckline of what looked like it may have been a head and shoulders top. We're technically significantly above that. So I would expect this now to offer some support now that we've gotten back over the top of that. So I believe we're going to have resistance very, very close to the open. Maybe not much, but some resistance, again at about 1808, and then once again at probably about 1816, where we had this little low here. Because if this is a legitimate double top, then what you end up with, call it 1815 and change. I like 1816 better. So basically what you have is, when you have a double top, you've got two attempts that come to roughly the same height. Then once it breaks down, you expect resistance at the lowest point that was in between those two tops. With that in mind, I'm going to make these kind of a light colored gray, because I don't want to get too hung up on that, and I don't want to do too much more damage in cluttering up this chart. So what we were looking at one point as being a potentially very bearish situation now actually could end up being sort of bullish, because we've seen it before where we've had a momentary breakdown of what appears to be a topping pattern that then recovers, and we end up actually forming a pattern that leads to a new high. And I'm not ready to call this yet, but this could end up kind of turning the flipping the table, if you will, on the bears. We could actually end up here, and it's worth keeping an eye on, that maybe we're putting in a little reversal pattern that is not quite complete yet. And you know what the words are going to come out of my mouth: dip, bigger dip, double bottom. Let's see if we get another dip and then get over 1800. That would set us up to get back and re-challenge 1850 if that continues to potentially play out. So this is kind of like a smaller mirror image of what we had seen take place in a Head and Shoulders top. We're now getting some of the dynamics that may be yet another Head and Shoulders, an inverse Head and Shoulders pattern that would lead us to challenge 1850. Highly speculative at this point. So what I would do is let's stick with kind of a little bit more about what we know in the chart right now. And that is, we've got 3 lines of likely resistance, almost equally spaced. So if the S&P is able to get over 1820, then I would say we're over this line, and we're getting close to being technically significantly over this line as well. So let's keep our eyes on it and just see, is this market going to keep on surprising us? And when is it going to stop surprising us? Really interesting stuff. So all of this congestion that I was expecting right here, the S&P just powered through, but its work is not yet done. 3 levels at roughly 1800, 1808, and again at 1816 that I think could put up a fight. Let's see what happens early this week. So once again, I want to thank you for taking time out of your day to watch this video. Thank you for your support. And if you're not a member of SB500chart.com, I ask you to consider it. It's not real expensive. And I think there have been a bunch of people who've reported back to me that they've gotten a lot out of it. So thanks for watching. Whether you are or are not a subscriber, thanks for watching. Take care.